Ladies and gentlemen, good day and welcome to the Q2 FY21 earnings call of Action Construction Equipment Limited, hosted by Emkay Global Financial Services. We have with us today Mr. Saurabh Agarwal, Executive Director, and Mr. Rajan Luthra, CFO. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal for an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anis Dadarkar from Emkay Global. Thank you, and over to you, sir.
Good evening, everyone. I would like to welcome the management and thank them for giving us this opportunity. I would now hand over the call to the management for the opening remarks. Over to you, sir.
Yeah, good evening, everybody. This is Saurabh Agarwal from Action Construction Equipment Limited. Last year,
Rajan Luthra.
Yeah, Mr. Luthra is also there, yes. Last quarter has been a pleasant surprise for us in the wake of slowdown and economic slump brought about by COVID-19 pandemic. The month of August brought some respite and revival in demand, and we were able to attain similar revenues on year-on-year basis and improvement in profitability in the last quarter. The green shoots of economic revival and increased order flows have continued and further improved going into the current quarter. Owing to the positive trend, I would like to bring on record that we have been further able to better our October month sales by about 20% as compared to the month of September. Our revenues for quarter ended September 20 were similar to quarter 2 of September FY20, and we were able to regain our revenue levels post the aftermath of lockdowns. We were also able to better our profitability margins in the last quarter as compared to the same period last year, and now our EBITDA margins stand at 9.7% versus 8.2% of the last year, and PBT margins, profit before tax margins, stand at 7.1% versus 5.8% last year. And we have seen growth of 18% in our EBITDA earnings, which are now at 26 crores versus 22 crores for the same period last year. Similarly, our profit before tax has increased to 19 crores versus 15.58 crores for the same period last year. Even though our revenue levels for both quarters were similar at about 268 crores. It will not be out of place to mention that owing to certain supply chain constraints, we were not able to fully capitalize on the potential of revenue increase in the September quarter. Otherwise, our top line, bottom line, and profit margins could still have been better by maybe around 10-15%. Looking at the improvement in economic activity and demand trend, we would like to revise our revenue guidance for the whole year, and as projected in August, instead of 30-35% revenue degrowth for the current year, we are hopeful that if the current momentum of economic activity sustains, we should be in touching distance of last year's sales, definitely with better profitability and margin expansion, and our EBITDA margins can also go into double digits. In the interim, we continue to take all possible liquidity preservation and cost control measures. We feel we have overcome the short-term turbulence being faced by the company, and going forward we are really confident of improving our revenues for the second half of this year as compared to last year, provided no major further disruption takes place in the current scenario. And we are very optimistic about the medium to long-term prospects of the company, accompanied by top line, bottom line, and margins expansion. Thank you. I think we can open for question and answer.
All right, sir. Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking questions. Ladies and gentlemen, we will wait for a moment while the queue assembles. To ask a question, please enter star and 1 at this time. The first question is from the line of Santosh Reddy from Bull Securities. Please go ahead.
Sir, I'm speaking from Telangana in Karimnagar. Sir, I want to know the China harvesters demand. Is there any company getting new dealers from Telangana?
Can you just repeat your question, please?
Chain harvesters. Is the company getting any new dealers for chain harvesters?
We make combined harvesters mounted on track, yes, chain harvesters, and we have definitely seen it growing in the last 2-3 months, yes.
Okay. Is there any plan to manufacture loader attachments?
Loader attachment for?
For tractors or something, etc.
Well, see, we already manufacture backhoe loaders. We already do loaders that we make. But as of now, to fit an attachment on the chain harvester, we have definitely not planned. As of now, yes.
Okay. What is the highest ever sales of backhoe loaders? Is it correct? March sales is correct?
Boss, I have not been able to understand your question. You want to know the backhoe loader sale for last quarter?
Yes, sir.
Luthra sir?
Yeah. Last quarter we
March
were
also.
able to,
In March also.
yeah, we are able to do 104 backhoe loaders.
And I think he's also trying to ask how many did we do in the March quarter?
Oh, yes, sir.
Yeah, give me a minute. So in the March quarter we did 89 numbers.
Okay. Sir, I want to another.
Mr. Reddy, sorry to interrupt, but may we request you to return to the queue for your follow-up questions, as we have several participants in the queue waiting for their turn.
Okay, thank you.
Thank you very much. Next question is from the line of Sanjay Dam from Old Bridge Capital Management. Please go ahead.
Congratulations, sir, for a really good quarter.
Yeah, thanks, yeah, thanks. It's a welcome quarter.
So, your guidance is like as you see it. So it's sometimes become very bleak, sometimes becomes very pleasant. So we are now in the pleasant part of it. So
I am generally by nature a very pessimistic person, so maybe that's the reason. अच्छे को अच्छा बोल देते हैं, बुरे को बुरा बोल देते हैं, not beating around the bush.
बिल्कुल sir. So from a 35% degrowth, we are now at flat YOY, right?
Yes, for the last quarter, yes.
Yes. Yeah. So.
And hopefully, if the situation remains, it seems that by the end of the year, we should be able to catch up to our last year's revenue, or maybe with a small deficit at max of 5-6%, looking at the current order flow and the momentum, unless and until something really happens again.
So basically, when you say flat YOY, you guided for the balance of the year, is it?
Yes.
Okay.
Well, I would say the whole year in totality. So.
Sorry.
I guided with respect to the whole year in totality. So last year we did close to about 1150 crores.
Yes, sir.
So hopefully we should be touching that revenue, or maybe at max a gap of 50-60 crores. That would be, let's say, 5-6% lower than last year. But we should be in touching distance of last year's revenue as it appears.
Yeah, that's what I understood. So I thought, let me again kind of doubly, cross-check with you.
And everything going well. Currently, it seems that we should be in position to exceed our quarter 3 revenue in the current quarter as well.
Right. So what is driving this, sir? I mean, which part of the business is driving this?
See, obviously, cranes have been a little slow. And actually, they were really not slow in August, September. But unfortunately, because of some unexpected supply chain issues, where we could have never imagined that there will be problems. And they cropped up, and so the cranes were lagging in the last quarter. I'm sure they will cover up in this quarter. And definitely our other segments which have been slow in the past, especially construction equipment, metal handling, and even agri. So all of them contributed, and construction equipment we were able to grow handsomely. If you talk on a year-on-year basis, even material handling was about a 31%. Even agri was about a 55%. So it was a combined effort of the other three smaller segments. Crane was a little laggard, but primarily due to the supply chain part. And looking at the scenario now, hopefully this month crane should also be back on track in this quarter.
So that supply chain problem is solved, sir.
It is still there, but we have learned to live with it and found ways and means around it. The problem is there, but it is being tackled.
Right. But is that something which is very specific to us, or are all your competitors facing the
some of it would be common to our competitors also, but primarily our main deterrent was supply of engines from one of our major engine suppliers, because unfortunately they supply similar engines to their tractor also. I'm talking of amalgamation group company Simpson.
Right, sir.
So TAFE, Massey Ferguson tractors also use a similar engine. So their priority was their own company. So that also led to a little debacle. But yes, we have mended and sorting out. So they've committed to come back on track as soon as possible. Yes.
Right. So I have a few more questions. I'll come back in the queue.
Yeah.
Thanks.
Okay.
Thank you very much. Next question is from the line of Suraj Navandar from Prithvi Finmart. Please go ahead.
Sir, good evening, and congratulations on the very good set of numbers. So my question is regarding the tractor space. If you can quantify what is our market share in total tractor sales, and if you can give the number how many tractors we sold this quarter and compare it with the quarter-on-quarter and year-on-year.
Yeah, we can definitely give you our numbers, what we sold this quarter or maybe last quarter. But if you talk of the market share, it is very minuscule, because now the market is definitely been expanding in the last 3-4 months. And we were doing all of close to about 4,000 tractors annually. So in a market size of 8-9 lakh tractors, that is pretty minuscule. Yes, but with respect to our numbers, what we did in the current quarter and the quarter before that, Musa sir, if you can elaborate.
Yeah. If you look at in tractors, we have been increasing every quarter. In the month of March, we did 370 numbers. In the June, we did 382 numbers, and in the September quarter, we did 589. And so every quarter we are increasing as compared to the previous quarter. And the other thing which is very heartening is the sale of harvesters. In this quarter, we did 66 numbers as compared to 22 in the last quarter, and as compared to 49 in the March quarter. So probably in the coming by end of this year, we may be number one in the combined harvester business, because we may become a number one in the combined harvester business. Yeah.
And sir, this tractor business is are we focusing more on it, or we are focusing more on the construction equipment where we are more dominant? I mean, given whatever the agri reforms that are going on, so the demand for the tractors and the equipment that is being used by the farmers might increase. So are we focusing in that area, or we are focusing on our core strengths of cranes and construction equipment?
The cranes and construction equipment and material handling is our core focus, and that is our forte. The company started with expanded into material handling like forklifts, and further into construction equipment like backhoes and road machinery. So obviously that is the main DNA of our company, and we also started doing tractors some years back, like 5, 7, 8 years back. So, but we have enough focus and are also reasonably determined to expand our agri business also. And it was some sort of a news to me when I was not aware that we just might start to do the largest number of harvesters in the country very soon. Mm-hmm. So, and I'm sure we are very much focused on tractors apart from our core business of cranes.
Okay, sir. Thank you. Those were my questions. All the best, sir. Thank you.
Thanks.
Thank you. Next question is from the line of Charlene Seth from Sears Fund Management. Please go ahead.
Good evening, sir.
Yeah, good evening.
Congratulations on these terrific numbers, sir.
Thanks.
So it seems we have gained some market share in the pick and carry segment.
I presume so. We were hovering around 60 to 63% for a good 1 or 2 years, and last quarter it appeared that we have increased by 3-4%. So I think we have increased our market share by 2-3%. I really can't substantiate it because I don't have data. Our competition ourselves really don't share data amongst ourselves. But yes, we have increased a little market share, yes.
Just to add on, I think the thoughts in their presentation have said they have lost market by 3.6%. So that has come to us only, sir. So I think we have gained by 3.
They have already agreed that we have got market share?
Yeah, that's right. They said they have gone market share and dipped by 3%, more than 3%.
Congratulations to us, Luthra.
Congratulations, sir.
Thank you.
Sir, I have 2 questions. First is on the employee base. I just wanted to compare the Y&Y employee base. The corresponding quarter we had 21 crores as employee costs. Now we have 18 with the same revenue. So can we continue at the same level of employees?
Yes, I think so. We have worked towards being more effective and efficient, and mainly deadwood has been dealt away with.
Okay.
And, but especially I would say in our agri segment, wherein we were trying to just somehow get more people and do more, and it was not working out. So we brought our focus back to profitability and increasing numbers subsequently. So I'm sure it's possible. We would be remaining in a similar boat for quite some time now, at least for the next 2-3 quarters, yes.
Okay, that's encouraging, sir. And the second question is regarding the construction equipment. So I was just noticing there's a very unlinear fashion of our results. Our EBIT is at 1.3% right now. It had gone up to 3% in last quarter. So could you please throw some more light on that, please?
Yes. Even I was a little surprised when I noticed this, just like you have noticed it. And so what has happened is we had to write off some inventory on account of certain new modifications and introduction of a new model, which we did in the market, an upgraded version. So on account of that, you see this, 2-3% loss, although the revenue has increased.
Absolutely.
But going forward, I'm pretty confident that we should be able to match our company average of about maybe 7-10% somewhere with respect to EBITDA level for this business. I'm sure it will start happening from quarter 3 onwards.
Okay, 7% plus from construction equipment standalone.
No, I'm saying is EBITDA level or let's say EBIT level in the construction equipment business should start to reach 7, 8, 9%.
Okay, that's encouraging again.
Yeah.
Okay, so that's it from my side. I would just request you to give the machinery sale numbers.
Yeah, Mr. Luthra will do that. Luthra?
Thank you.
Yeah, the numbers are for this quarter are cranes is our pick and carry cranes 891, mobile tower crane 6, fixed tower crane 42, crawler crane 4 numbers, tractors I already told 589, backhoe loader is 104, forklift 266, 11 compactors, 3 graders, 7 truck mounted cranes, 66 harvesters, 308 rotavators and 4 piling rigs. Yeah.
Thank you, sir.
Thank you very much. The next question is from the line of Rajiv Maheshwari from Praj Investments. Please go ahead.
Hi, Mr. Agarwal. First of all, wishing you and your entire team a very happy Diwali in advance.
Yeah, same to you, sir. Thanks.
Yeah. And congratulations on a good set of numbers considering the environment which we were in the last quarter.
Yeah, thanks a lot. And rather, like I said, we could have done 10-15% or even more. We just could not sit because everything was running on low inventory. So
Yeah. I understand. In fact, in the last call, based on the percentage, I had asked you whether we'll be able to cross 200 crores. So you had told me it will be more than that. In fact, even I didn't expect it to reach 260 crores, considering what all went on in the March and April and May. So it's good to see things.
In September, we had started thinking we can cross 300, but we were not able to.
Yeah. In fact, as you told, there were some supply chain concerns. So I think, and the number which you have given that we may touch the last year sale,
So I did a calculation, so it's coming in the range of 325 to 350 crores. Fingers crossed. So the first is,
you're talking of quarter three?
I'm talking for about quarter 3 and quarter 4, both.
Quarter 3, it definitely seems we will definitely exceed. Luthra sir, what is our last quarter 3 number for last year?
Last year in quarter 3 we did 289 crores.
I think if everything goes well, we will exceed it by 20-25%.
Yeah, and it's good to see you're sounding much more bullish this time after a long time, maybe 2, 3, 4 quarters. So
yes,
it's really good. Yeah.
Post-COVID, we just didn't know what will happen, how it will happen.
I mean, it was quite uncertain. Nobody was clear kya hoga, kaise hoga, but it's really a good effort from your side. The only concern is like you told that because of the supply chain concern, we had an impact. So what was the impact on sales, and did we carry forward those sales, or we lost on it, or how was it like?
See, we lost at least 10-15% revenue in the last quarter on account of supply chain. So this revenue could easily we have been looking like a 300 crore.
Okay.
And there were 2-3 main big suppliers from where we got trouble. One of them was a Sundaram Group company, and other was a big hydraulic supplier, our cylinder supplier in NCR, and another was an engine. So we have not totally overcome the problem. Still supply chain problems and disruption with these 3-4 main components was happening within October also. But yes, it is coming into control and it is on an improvement trend. So we are very confident by end of November, middle of December, it will be solved and we will be able to achieve the revenue which I am forecasting.
So basically going forward, we don't expect a fall in sale, because had we got those 10-15%, the result would have been much more better than what it's right now. So hopefully, yeah.
And as a policy in our company, we only get stuck once. We don't get stuck in the same problem again and again. So we'll definitely come out of it.
Okay, right. So that's a good part. And where do you see this momentum coming from right now? Suddenly the increase in the sales on the other 3 sections, like the material handling and the tractors, and also what exactly has changed suddenly that things are picking up in these areas? Because in some areas we have shown maybe a 30, 40, 50% increase compared to last year.
See, basically the segments we work in, primarily it is the construction sector, and then definitely the heavy engineering and the industrial sector, which uses a lot of cranes and metal handling. And then because of our tractors and harvesters, the agri sector. The construction sector definitely was, like I had mentioned in my last call also, that because of heavy monsoons and longer monsoons and the migrant labor problem or the labor shortage, a lot of these projects were, sort of just turned off for 2-3 months and were to be restarted in September, October once the rains finish and the labor might start to return. That was the anticipation, and that is what has happened. So most of the construction projects of the companies which were on a slow mode or practically shut off for 2-3 months, let's say June, July, August, or for some companies even May, June, July, August. So those came on board and the construction activity has sort of normalized and regained.
Okay.
Industrial activity very surprisingly has really, even I was caught unaware that the way it bounced back in the last 2-3 months. And the basic reason behind that, I really cannot answer, because the industrial activity has increased more or less all across.
Yeah, even in the steel companies have raised their price. Suddenly the car sales have picked up. So suddenly it's that as if nothing had happened in last quarter. It's looking like that.
So the industrial activity has generally picked up, and a lot of cranes are required right from handling of steel in every cycle, whether it is the iron ore mine or whether it is the plants or further the rolling mills or the stockyards or transportation. So it has just picked up. Cars and automotives and scooters, I think, is more to do with obviously people will prefer more personal mobility than being on transportation. But it has helped everything all around it. Yes.
Yeah, it has helped the entire industry as such. The one final part is, in the last call, there was some discussion in terms of the small players in the pick and carry cranes would be literally left with nothing. So are the only two dominant players, ourselves, Ace and the other competitor, are the primary two players, or still we see the smaller players eating into the shares, or how is it like, the market scenario?
I would say 95, 96, 97% of the market is between Scots and Ace for cranes.
Okay.
Obviously, we are the dominant player. And there are two, three, four rather. Sometimes there are two, sometimes there are three, four. They just keep on waking up, sleeping. There are two, three players who have been a little active with a 2, 3, 4% market share. Obviously, they are still existing, so they have not been knocked out as of now. Let us see. It's very difficult for me to answer that question, but they remain to continue. They continue to remain where they were.
Okay. And one final question: how is the export scenario after the COVID in terms of the exports to the African countries or the South Asian countries?
I think it has resolved already, and last year we did close to about a 6% revenue from exports, and we were hoping to take it to a 10% and then finally to 15-20% going forward in the year. So I think we are on track to take our revenue to 7-8% within this year. It appears to be like that.
All right. Right. Thank you so much, Mr. Agarwal.
Yeah, thank you.
Thank you very much. Next question is from the line of Naresh Kataria from Money Curves Investment. Please go ahead.
Congratulations, sir. Thanks for the opportunity to ask my question. I wanted to ask on margins. I heard that you are looking at potentially much better margins, close to double digit. What are the levers which will come into play? Is it just volume growth, or are you seeing better pricing? What exactly, how do we read this very, very positive statement on margins?
Yes. See, it is a combination of a lot of factors. I think primarily the margins depend on the selling price and the raw material cost. So because the steel prices have gone up, and accordingly we have increased our selling prices to some extent in the month from 1st November onwards, and going forward from January we'll further increase our prices to set off the material cost aspect. So that takes care of that. And on the contrary, we are very hopeful that our operating leverage with our numbers going up, that will definitely contribute to our margin expansion. Apart from, because of COVID, the various cost control measures that have been put in place and whatever we've been able to do and whatever we see we can do further. I'm sure that 1.5 to 2% expansion in margins on account of cost control, which we have been able to do, which might be a little more going forward. That is definitely in place, and operating leverage will further bring in, margin expansion. So that actually gives us a lot of confidence that we should be. I'm as sure as I can be that quarter 3, quarter 4 would be double-digit margins at EBITDA level, and we just might be able to do it on a whole year basis also.
Very good, sir. That's nice to know. And my last question is on dividend distribution. I see that we've been distributing 10-11%. So with better times, could we look at, and our debt levels are also quite comfortable. Would we be looking at slightly better distribution?
I'm sure. And as a matter of fact, we've been distributing with a policy of, distributing at least 30-40% of the money that we can every year. So I'm sure with the profit margin increasing and the availability of cash buffer in the company, and our reducing debt levels. Unfortunately, March seemed to be a little higher just because our working capital was, put in a mess. So definitely with time, our dividend yield or dividend system will definitely be going up.
Perfect, sir. Thank you and best wishes.
Yeah, thanks.
Thank you very much. The next question is from the line of Sanjay Dam from Old Bridge Capital. Please go ahead.
Sir, two questions. One is, in the last call, you were kind enough to, explain how big the crane market is, the addressable space for us, and what was the construction machinery market. And I recall you saying that, the crane market was about 1,700-1,800 crore. And then the construction market was kind of about 8,500, 9,000 crore types. So Going by the addressable space, do you think that we'll catch up with at least we'll address the larger space and in the construction equipment revenue will kind of do justice to the our revenues will do justice to the opportunity size?
I am as sure as I can be now. And I will answer your question again in two parts, A with respect to cranes and B with respect to construction equipment. In cranes, we are already in a majority market share, and I'm sure we'll continue to work hard to increase it. But with reference to a lot of virtual meetings and discussions which I have had with some of the key players with respect to construction and infra in the country, the impression that some of them have really senior people who are also well connected in the circuit with respect to what is happening, what is not happening. That one of them told me, sir, that you just might see one of your best years next year. So that gives me confidence that the crane market will further expand. It has to, with growth, with infrastructure, with activity, with economic activity, with mechanization happening. The only problem with our country has been that I do not know what happens every 1 or 2 or 3 years. Something happens and then the thing goes down and then catches up, then it goes down, then it catches up.
Yeah.
So, and this time when the revival had started happening December onwards, unfortunately, Corona caught up.
True, sir.
This is a statement which I got from one of the leading players, that not from one, as a matter of 2, 3 of them, that next year could be one of your best years so far because of the amount of traction they are seeing in the construction activity, and the crane market size accordingly will have to expand. This is first part. Second part, with respect to construction equipment, we have been struggling and toiling for so many years. And touch wood, I can very confidently tell you that for the first time, even in my own heart, I have got the confidence that we can go anywhere, not just somewhere. We can go anywhere. We have already started heading in the right direction, and God willing, that I used to say that there is a potential to grow 70-80% every year on a CAGR basis next 5-7 years with respect to our construction equipment business. And for the first time, I'm fully confident that we are on the right track, and it just might happen. Whether it happens or does not happen, obviously, you'll know, I know. But we will do justice to the construction equipment space, the size and the quantum available with respect to our company. I'm very confident.
Yeah, because sir, you've got, in the 1,700 crore space, you've got a 60% share or thereabouts, right? So unless we do kind of, in 10,000, so about 8,000, 9,000 crores.
आपको ये कह सकता हूँ अगले 3 से 5 साल में ये जो 8-9 हजार करोड़ है ये भी 10-12 हजार या उससे ज्यादा होगा.
Absolutely, sir, absolutely.
और अगर सब ठीक रहा तो इसमें से 1-2-2.5 हजार तो हम जरूर करेंगे, because अगर नहीं करेंगे तो हम बेवकूफ होंगे, कोई और करेगा.
So just putting that, I'll just extend what you just said. That this 9,000 can become 12,000 crore, and we could do 2,500 crore out of that
over the next 3 to 5 years. Yes.
3 to 5 years, whatever. I'm just saying that year after year we are kind of seeing our dominant share in cranes being there, but we kind of not been reaching anywhere in the construction space. So ये 12,000 crore का जो space है sir, so would you be kind enough to kind of break this up into the opportunities which are there, and what are the things that we could address?
ये जो लास्ट टाइम भी शायद हमने डिस्कस किया था 8-9 हजार करोड़ का जो फिगर बन रहा था, that was primarily with respect to our addressable market space, which was backhoe loaders,
that would be how big, sir?
And soil compactors. So which with the market size is about 8-9,000 crores, which eventually with time will go to 10 and 12,000 crores. That's what it looks like.
Right.
So अगर इसमें देखें तो I would say the majority of the portion is backhoe loader, and yes, there are motor graders maybe worth about 400-600 crores, and soil compactors may be worth about another 800,000 crores. So 8-9 हजार करोड़ में से 1200-1500 करोड़ की रोड बची भी मोटा, and balance is backhoe loaders. So I think we will be going into both of these spaces and taking a 10-20% market share in both of these places It looks doable. It will not happen in, like I said, in this year or the next year. The next 3 to 5 years, it will happen. We have already been able to position ourselves, get acceptability, come over the obstacles, improve the machines, do whatever that needed to be done, and we are already at some level and acceptance. And from here on, I'm sure it will continue to increase.
Perfect, sir. I think that's all from my side.
Yeah.
Wish you all the best.
Thank you. Next question is from the line of Adil Khan from ICICI Direct. Please go ahead.
Good evening, sir.
Yeah.
Congratulations on a stellar set of numbers. So, sir, I had just two questions. The first one being that the last quarter, we talked about a launch of new product. So that product had a market size of around 300 to 400 crores. So what is the outlook in the second half of the year for that, sir?
We wanted to come out with that product within this year, and as of now, we are on track. So if everything goes well, we should be bringing it around sometime in February, March. So the actual effect of some sales and the revenue and profitability increasing would be coming in next year only, because February, March, sometimes we are able to bring around that product. So we are on track, and we'll bring it this year. So, yes, the addition to our bottom line, top line will start happening only next year.
Right, sure. And sir, what would be your outlook on debt position for FY21, sir?
See, our position before COVID was very simple, that we need to go debt-free as soon as possible. And if you look at the trend for the last 4 or 5 years, we've been able to steadily reduce our debt, which has primarily been our working capital, short term. And end of March, we were left at 81 crores. So if everything goes well, I think we should be able to hit a 50-60 crore by end of this year, or even better. Because of this disruption and our working capital getting disrupted for nearly 3-4 months. So we might not be able to bring it down more than that, but I think we should be down to 50-60 crores levels. Am I right, Luthra sir?
That's right, sir.
That's what we're planning, right?
Okay, sir. Thank you. That was it from my side.
Thank you. Before we take the next question, we would like to remind participants that you may enter star and 1 to ask a question. The next question is from the line of Bharat Parekh from CLSA. Please go ahead.
Hello, can you hear me?
Yeah, I can hear you loud and clear.
Sir, congratulations. I must say that you are one of the few managements in the construction stroke equipment space which has given such a positive commentary. So I must say, so congratulations on that. But sorry to dig deeper, but having seen this space for a decade, what I observe right now on the ground, sir, is that except for one Madhya Pradesh-based construction company, average order backlog of all the construction companies, including the largest company in India, is actually running negative right now. Yeah. While we appreciate that things will bounce back from a low base, but until order backlog starts to grow, because they already have a construction equipment right now. So which is that sub-segment, sir, which you see is sort of in a way bullish, because we talk to all the industrial companies, while volumes are back, but capex is on freeze as far as FY21 is concerned, if not cut by 20-30%. So sorry, I don't want to make you negative. I'm just trying to understand, sir, better in terms of real feel from the ground, which you get better than us, in terms of where do you see this positive delta coming from as a sectoral perspective. And secondly, if you can give us a perspective that was your base low last year that we are having such a robust growth right now in October?
Okay.
But first question will be really helpful to get your perspective, sir.
Yes. See, what is happening that if you talk of the construction sector, it is broken up into a lot many things, whether it's roads, metro, bullet trains, urban infra, ports, X, Y, Z. And, if you look at the recent changes in the tendering norm, which has been done by the road ministry, wherein they are allowing even smaller players with a slightly lower revenue base and things. I'm sure you would have read that article.
Yes.
So, see, the market with respect to infra development and construction, even the government doesn't want, should be controlled by 4, 5, 6, 10 fewer people. Rather, smaller companies who have the potential to become bigger should also be able to play in the infra story, should also get work. Otherwise, it is limited to 5, 10, 15 players bidding or getting a tender and creating a backlog or increasing their size, or because the size has grown too big, because of the inefficiency delaying the project, or you understand what I'm saying?
Yes.
So maybe the order book of the bigger companies might not increase. But you also have to understand that a lot of middle-sized companies or companies which are on the verge of being called bigger construction infra companies are on the verge of getting more orders now and in future. So that is the first submission, I would say, with respect to what you just said. Apart from that, if you with respect to metro, it is practically starting in every big, has already started or happening. And once it starts, it's only going to increase, because just by putting 1 or 2 lines or 1 or 2 phases, a metro network can really work or be completed. And projects like your bullet train, which is now nearly under award, and the actual need of urban or civic infra in the very cities where all of us stay. I really don't know whether you're from Bombay or from Chennai or Bangalore, or let's say a tier 2, tier 3. So the scope has been immense. A lot of things have been happening in the last 10, 12 years. Fortunately, unfortunately, the speed at which they were happening and the speed at which they were required to be developed to cater to the actual requirement, there was a lag. The requirement was increasing faster than what the creation was. And in any case, the base of the creation of the infra was already lagging. Yes, the biggest question mark which is going to come is from where all this will be funded. So that's one question I really don't have an answer to. I mean, if that question the government is able to answer, whether with private play coming in, whether getting money at lower cost, or just, for example, just like the bullet train project, getting in funding from, or the dedicated freight corridor, getting in funding from countries with lower or very less interest cost. So that is one question I really can't answer. But yes, with respect to the potential, I think it is enormous. That is all I can tell you. But another thing which I just said, our country is basically unpredictable. And if things seem to be coming on track, then they get derailed. This time the derailment was more to do with COVID. After, the ILFS debacle and 1.5 years of slowness was there, things were getting back on track December, January onwards, and then COVID happened. Again, they seem to be coming back on track. So that is something which is definitely much beyond our control, influence. We just have to bear with it. And if you talk of, yes, definitely last year was a little slowing year for most of the equipment manufacturers, and same was for us. And we did degrow a little in the last year, post ILFS, and then the market slowing down, and then the elections and whatever. So yes, the base was definitely a little smaller last year. So that's why you see that we did 268 crores, same quarter last year, same quarter this year. So that is also a reason that you might see some growth, but I really don't know how quickly, how fast, how bigger the infra construction or the industrial landscape will grow in our country. Another thing with respect to our company especially, that about 60% of our revenue, I'm talking of infra and industrial breakup. 60%, or let's say our crane business, comes from the infra side, and balance comes from the industrial or heavy engineering or general manufacturing at large. So right now we are seeing traction on both the ends, and good monsoons and everything. And India is primarily an agriculture-based economy with respect to the size or the contribution agriculture has in our economy and our population. So we are in all the 3 segments. And if the country grows, we grow. So yes, if somebody believes that the country will not grow and will start to languish in some time or will just taper off, then obviously we will also taper off. I'm being very frank. But yes, if somebody can bet on India, then I'm sure we are more or less in most of the hardcore plays.
So great. So that's really helpful. So secondly, I wanted your perspective that there is a big narrative on currently Make in India and Atmanirbhar Bharat, and a lot of focus on that. Can you help us understand, was imported equipment, especially from China, was a threat at all in your business? And do you see some action on the ground in terms of government tenders coming out with Make in India as a sort of prerequisite and stuff like that? How do you see? Is it still a narrative or you see reality on the ground?
See, unfortunately, while answering my last question, I think I should have covered this as well. But good you asked it. See, with respect to supply chain, China, with respect to small, big components and even fully finished machines, not only construction equipment, but most of everything was catering to the world and even to the biggest of the companies globally. One thing is for sure, which I'm seeing, feeling, and let's say a couple of our vendors and my brother who are in the automotive space or let's say component space, they because most of the people globally are looking for an alternate supply chain to at least a 30 to 50% extent, which needs to move away from China. So that's a fantastic opportunity for India. And like I said, talking to some people who are really big in these spaces and who also supply a little to us, and some of them are friends, they are already seeing this, hearing this, and they are on the verge of deciding whether to expand more or not with respect to capex or capacities. So that is one thing for sure which is happening. So coming to the second part of your question, Chinese equipment companies did establish a decent amount of presence in India, especially in the bigger segment of machines like the bigger crawler cranes or the bigger tower cranes or the bigger truck cranes. And they, unfortunately, Indian companies are at a slight disadvantage because the cost of money they get through Hong Kong, so they've been able to offer 1 or 2 year credit period for these bigger machines, and there was really no player in the country. But yes, in the last 1.5 years, we've developed a series of cranes to compete with the bigger truck cranes. We have now tower cranes which are even bigger competing with the Chinese, so wherein we are selling more than the Chinese now in our country. In the smaller tower crane business, Chinese used to exist from 2004, 2003 onwards. We sort of overtook them by 2010-11, and today we have about a 65-70% market share in tower cranes. And the Chinese for the smaller models are nearly out. But they continue to exist in the bigger models where the quantities were less in our country and they were being imported. So we have also become reasonably dominant there as well with our bigger range of tower cranes. So yes, China has been there, is there. And for how long? And now let's say for bigger crawler cranes. So we are about to make a bigger machine which will be around a 160 ton. But yes, there is requirement of 250 tons and 600 tons, which nobody is doing in India. And obviously the Chinese are much more cost effective as compared to the Japanese or the Europeans. So that space will still be open to them. In bits and pieces, spaces will be open to them which are not being catered by anybody in the country. But as soon as somebody starts to cater that space in the country with reasonable quality and a good price, things start to roll back, which we have seen in the past and I'm sure will happen again.
Great. Thank you so much, sir. And really also nice of you to answer this candidly, and wish you best of luck, and hopefully your optimism sustains and we'll see even better numbers from you, and I wish you best of luck. Thank you so much.
Thanks a lot. I hope my optimism remains and sustains. Thanks.
So all of us need this, sir. Thank you.
Yeah, thanks.
Thank you very much. As there are no further questions, I now hand the conference over to the management for closing remarks. Over to you.
Yeah, like we discussed, we have been lucky enough to do a similar revenue as compared to last year, which was slightly beyond our expectation. And the economic activity and the momentum, it seems, is nearly at the same level where we left it pre-COVID, where the situation appeared to be a growth situation. So our order booking, our order flow, everything seems to be well on track. I just hope and pray this momentum continues and country is able to fight off COVID as soon as possible, and maybe the vaccines might be out in January, February. That's what I hear. So let's hope and pray that all of us are able to fight off COVID and come back to economic normalcy and then grow from there on. Yeah, and definitely we are looking at, maybe touching our last year's revenue, even though the first quarter was a total washout. So I feel in a way that is growth happening in the company, and let's see where we are able to go from there. Thank you.
Thank you, everybody.
Thank you very much. Ladies and gentlemen, on behalf of MK Global Financial Services Limited, that concludes today's conference call. Thank you all for joining us, and you may now disconnect your lines.